stock market today analysis for November 21st, 2022. We got the Nasdaq down by 1.09%, S&P 500 down by 0.39%, U.S. Treasury 10-year yield up by 1 basis point. Gold down by 0.84%, Bitcoin down by 2.5%, and oil down by 0.42%. Earnings lightening up a bit here. We had 28 different companies reporting today, maybe a little more than 28. Tomorrow we got, looks like a little over 40, and you can see the rest of these here. So slowly finishing up with the earnings season. At Zoom today, Baidu tomorrow. So whatever your strategy is, make sure you're paying attention to earnings and take the appropriate action for your specific strategy if you need to take any specific action. The volatility index closed lower today, closing at 2.36 down. So apparently players in the market are feeling less fear, so the VIX is going down. The VIX is basically puts bought on the SPX about 10 days out. So it looks like in around a 10-day time frame, the amount of people, big investors, feeling that the market is looking like it's going to pull back, well, there tends to be less of them at the moment. This risk indicator still in the high range at 254.8. See, it got up here around, it was back here almost at 300. I think it hit 300 at some time, but almost at 300, pulled back about, pulled back about 50 points, right around that 250 area. So I'm measuring risk as by the Dixie, which is measuring the US dollar against other currencies, and with a 10-year treasury yield divided by 1.16 for some reason is showing that risk is high in the high zone. VIX is showing that fear is low. The other bonds, we got some bonds going down a little bit, some bonds going up a little bit. When you hear about people talking about inversion in the yield curve, this is basically what they're talking about. This 13-week, 5-year, you can get more interest on lending for less time than you can for a longer time. And apparently when this happens, it's indicating a recession. Now some people, if you listen to them on financial media, they see this and you might think that there's going to be this immediate response, right? As soon as you see this yield curve inversion, like tomorrow, the next week, or something like that, there's going to be a drastic change, but it doesn't seem to happen that way. It seems to be a bit of a predictive indicator that's predicting a bit into the future. If you have any better intel on that, let me know in the comments. S&P 500, we got kind of a doji action going on today. Or maybe even someone might say a little head and shoulders, right? Just like we did here, a little head and shoulders, boom, falls down over here. We're really kind of range bound at the moment. You see that it's in this range, just kind of wobbling back and forth, but it's hanging out above the support line, right in that area. So we'll see if it stays on top of that, but so far not able to break above that 200-day moving average. And the weekly stochastic is it's moving up, but looks like it And you know, it's moving up. What we see with the price action, it's pretty wobbly going sideways, but nonetheless, our weekly trend is on the up. The technology sector looks a little bit of the same, pulled back, maybe like this little head and shoulders, but really we got a high, lower high, lower high, and yeah, it's sort of in this range here too, but not looking too strong to the upside. Same thing, we do have an uptrend in the weekly stochastic, but it looks just not looking like a real strong, like when it was going down here, that was a strong downtrend. It's an uptrend on that weekly stochastic, but when you put these together with these, we're going sideways. It looks pretty weak to the upside. Healthcare though, healthcare is it's not rocketing it's not rocketing up by any means, but it's stronger than some of the other sectors. We have this you see the top of this candle here traded all the way up here, but selling pressure pushed it down, and we're really just kind of stuck in this range here, most range bound. And the financial sector has been having a strong uptrend on that weekly stochastic. However, we are also in the sideways range right at the moment, above the 200-day moving average, and not really getting much above it. And we'll see if it's able to maintain above that 200-day moving average. Consumer discretionary. Consumer discretionary is tested that 50-day moving average back here on last Tuesday, but has been falling short and basically been selling off. Also kind of range bound right in here. You can really just see it's been in this range. Broke out of this range a little bit, goes a little bit to the upside, but pretty much throughout this range. I don't know if it's a profitable trade, but if you could get some I have no idea if there's any premium for iron condor or where you could sell some credit spreads around that, but it's real range bound, so it probably would be safe to do that. But also it does kind of seem like it's got a bottom right here. Are we going to drop out that bottom, or is it going to keep it? Industrials, look at that, sideways. We've got a sideways market at the moment. We've had a strong uptrend with the industrial sector starting back right in there, and then it started, weekly stochastic started showing us that. Looks like it might start, this one has been a strong uptrend, but it looks like could potentially start wavering off. It looks like those two lines are starting to tighten. Remember, that's a lagging indicator, and right now we're just kind of moving sideways. IWM really got this kind of weak doji candle, and we see we've been in this uptrend, but that's starting to tighten up too, and just been sideways. If you're looking from, depending on which area, like kind of went in the sideways range here, but now it's kind of one right like this, but now it's kind of in this, maybe it's kind of in this little sideways, so slowly creeping its way up through the sideways movement. Qs, potentially little head and shoulders pattern, just like we saw here. So wouldn't be surprised if we see some action to the downside tomorrow. That weekly stochastic, even though it's been up, it's just been moving without much power, just kind of creeping up, and you can really see this also has just been kind of like a sideways market. The dollar, we see it popped up quite a bit today, even though it popped up with that doji candle, a bit of a gap there, and broke out of this little range that it was in, range bound, but now kind of in this. We'll see if it breaks this, but a lot of times, it's dollar up and other assets down. dollar down, other assets up. It's not necessarily written in stone, but it does tend to happen like that often. So not really a surprise if we see the dollar up, that we see stocks and other things going down. Bonds via TLT. Even though the downward candle, overall we've been moving sideways for the past 4 trading range. You can see it here, a little bit sideways, and then it's another sideways but up a little bit. Now another sideways but up a little bit. And this is kind of what the stock market has kind of been looking like to some of these sectors, just grinding sideways but up just a little bit. Look at that, just hugging that 50-day moving average. Had a lot of action in oil. Boom, look at that, sold off, came down here and test this around that $75 area. Boy, you could have made a lot of money if you were going short. You sold some contracts short right through here. You could have made a lot of money, but you have to have deep pockets in order to put those positions on, and you got to be nimble. You got to be ready to take those off. You got to have your finger on the pulse of what's going on. So now we bump back up here to 80 bucks. So all the selling pressure right here came in again. This would possibly indicate that we're going to have a floor here at $80, since all the selling did not hold up. A lot of buyers brought up the price right here to 80 bucks. I think that at some point it's going to be back here in this area. I would say I think we're going to see more of this 85 to 84 to 89, somewhere in there, 84 to 90. I think we're going to see that area again. Gold, been selling off the last couple days. Last 4 trading days been selling off. At the moment, looks like it might be building a base to go sideways right here at that 1740-ish area. What do we and then we kind of see, right, it's tested this area before, kind of got stuck in here before. So overall, depending on how long you're looking at this, going back to maybe about right here around August of last year, we've kind of just been in this range, right? Here's the bottom part of our range. Here's kind of the top part of our range, and I guess maybe a little bit higher right here. We're already right in there around the 720 to 740. Definitely seem we got a kind of triple bottom right here, so it really seems like we got a lot of strong support right here at around the 1620, 1640, somewhere in that area, that a lot of people are buying contracts there. Seems like the price is low enough that people are willing to buy. But when we start getting closer to that 1800 area, it seems like the futures market feels like that's a little too much, and they're selling off, which ultimately gives us not a strong slope down in the 20-day or 200-day moving average, but it is sloping down, and a bit of a sideways slope down, sideways down. We'll see if that continues to happen. But even though this is the paper price of gold, go out into the market and see if you can buy an ounce of gold. How closely can you buy an ounce of gold at this paper price? Go ahead and try that. Let me know how that goes. Bitcoin. Well, now we're down below 16,000 again. Not much below it, but we are below it. 6 months. Let's move it over here to 3 months. Yesterday, or I think it was yesterday's candle. I have no idea. Well, I guess it depends what time zone you live in. So this candle here representing the 21st, Bitcoin got as low as $15,456.59, and it's up just a little bit. Now what we want to see right here, we see that it was building a base here, but it looks like it might have been building a bit of a ceiling for itself, hitting this resistance, and then it's as far as support here, it broke through, retesting this low right here, and we're back down there. So it's a bearish indication. There's a lot of bad news going on with cryptocurrencies and things like that, so that's probably putting a lot of weight on that. But how low will Bitcoin go before a lot of people step up and start buying? I don't know. I really don't know. When back in the day when Bitcoin got to up here around this 60,000 and however high it was getting, there was a lot of hype, right? There was a lot of positive hype going on. Right now there's not that positive hype. Not only has it been selling off since basically since about last year, not only has it been selling off, but lately in the news it's just another catastrophe for things related to cryptocurrencies. And I know you don't want to throw the baby out with the bathwater, so I'm not saying don't throw the baby out with the bathwater. What I am saying is I wonder how low this is going to go before significant buying steps in and says, hey, this asset is underpriced at this. This is a fair value. This is a good deal. We're going to step up and start buying. Right now we haven't figured that out. Yeah, so we'll see how that goes. Oh, I forgot to give you guys this. Boom. All right. Now, weeks ago, however long ago it was that I started making this specific video with this chart, when it was way back here, I was talking about we need to test this to see what's going to happen. Now we're testing it. Now we see it broke out, but right now it's going a little bit. It's going a little bit down. We're not skyrocketing up, and that's okay. It could shoot up a little bit by looking at everything that we see in the on the candlesticks. I don't think it's going to be shooting up. I don't see anything on those candlestick charts that tell me this is going to be shooting up. However, it could just grind sideways. I did talk about that. We got in this in that area right here. You see that little bit of price, kind of stickiness, little W right there. Okay, we got a W right here. We got this little area right here. So I could see it kind of grinding in this range and just sort of, just sort of grinding sideways, just kind of like rocking, just like that. Potentially, if not, if it starts breaking down, if we break back into break down and break back into this channel here, we want to see what's going to happen, because maybe it's going to come down. If it does break down into this channel, which it could stay out of it. If it stays out of this channel, kind of grind sideways a bit, maybe down but sideways, but out of this channel, then we're probably going to be leaving the bear market. But if it breaks back into this channel, you got to see what it's going to do around this area and here, around that the 380-ish area, 380, 390, something like that, in that area, and then all the way there down to about here, the 357. So that 385, 380, somewhere in there, that 357, which is a lot of people's favorite number. Got to see what's going to happen into that. Right now, I think for some people, this is a great time to be entering the market. For other people, it's not necessarily a great time to be entering the market. What is going to be the difference that determines those two things? Ultimately, it's going to be the individual. So if you want it to be a great time for you to be entering the market, one thing that I think you should be looking at is paper trading. Paper trading and considering learning how to sell cash secured put options on stocks that you're okay with owning. You know, it's literally safer to buy a stock by selling cash secured put options on it because you pay a lower price. You're letting the price come to you, and if you're going to buy the SP 500 at 350, and if you're going to buy it at 350, and someone else is going to buy it at 350, but they sell a put option there, the person that sells the put option there, because of the premium, actually buys it at a lower price than for 350. Now, the trade-off is you got to buy 100 shares, right? These contracts work in increments of 100 shares. So you got to be able to pick stocks you can buy 100 shares of. So how do you pick a stock? Well, you go to iofsuccess.com and you download this cash secured put stock selection guide. Download this, 3 stocks I sell cash secured put options on. They're not the only 3, but they're 3 that I've consistently sold cash secured put options on for years. And you get an idea of how to select them. And you watch the video that I linked to at 1 minute in this, and you gather information and you start paper trading. So do all those things and start getting familiar with how to do this. And when you buy stocks via selling cash secured put options, you bought them from being an insurance company. So if you're worried about the stock going down in price, you just buy yourself some insurance. Instead of selling it, you buy it from somebody else. You could do this little thing called a collar. You could be buying the insurance and selling a different call option to fund that. So there's different things you can do. You end up getting having way more tools in your toolbox when you learn how to implement options into your life. So you guys have a fantastic day, and I'll talk to you later.